What's happening, everybody? It's your boy Kreative. Go ahead, say it with me. We are back at it again to do what? To create something great. Now, today I'm super excited what I have planned for y'all. We're going to be going step by step now on being able to create a new options algo bot. This is going to be a bot that's going to trade consecutive candle options, and all this is going to make sense as we walk through this. And we're also going to be able to understand the inspiration that came behind being able to create this strategy and being able to actually develop the bot. Now, here at Kreative Kodr, our aim is to be able to create different algo trading strategies, AI agents, right? And being able to see what kind of creative and different things that we can do using Claude Code. In addition, Claude Code inside of Cursor. Now, if this is something that sounds like this for you, go ahead and smash that like and subscribe button. I'm not going to hold you. I've been doing this for just under a year, right? And I've been streaming my session with y'all since about October of 2025. So hasn't been too long. So I still consider myself a noob in this. So if there's a couple of things that I may get wrong, couple of mistakes that I may make, right? I just ask you for your grace as we go ahead and jump into this. All right, enough of me talking. Let's go ahead and jump into this thing. So this is going to be our vibe coding session, right? Something I want to be a little bit more consistent with regards to dropping. And this is going to be for a new algo bot. Now, the reason I'm creating a new algo bot is because previously, when it came to our bots that I've been running since about November, really October of 2025, there's a few that's doing well, is about to be promoted to actually run with real money, but then there's a few that I need to replace, right? So what I came up with was, and what I'm looking at right now is trading view, and this is trading view on the 1 minute chart, right? So what's that? What does that mean? It means that each one of these candlesticks represents 1 minute of action, right? Whenever you see a red candlestick here, that is going to mean that the bears are in charge, and their main aim is to be able to push the price down or push the price towards support levels. And whenever you see the green candle here, that is going to represent the buyers or the bulls, and their main aim is to be able to push the price towards resistance levels, right? And I know, oh, here it is. And I know I talked about support and resistance, so let's just go ahead and jump into this and being able to explain this bit real quick. So let's call this our SPY, and SPY is the S&P 500, the top 500 companies within the New York Stock Exchange. And this SPY, and this is going to be our price, right? Whenever we have our price making lower lows, right, our lower lows is going to denote that it is touching the support level, right? So whenever you hear somebody say, all right, bet I just got in at support, what is that? That's letting you know that they just bought the dip. So you're going to buy at support. And whenever we have our price that's making higher highs, we are going to be at the resistance levels, right? So you sell through support and you buy through resistance. So let's come back to one thing I just also wanted to know is because I'm seeing a lot of wicks here. What is a wick? A wick is letting me know that is rejection to whomever that candle color is, right? So the wick here is letting us know, even though it's pointing up, pause. This wick is letting me know, like, all right, bet the bears or the sellers try to push this price down, and there's volume to be able to like support it too, right? Because down here you're going to see the volume. Up here, you're going to see the candlestick and a wick. And what this wick is letting me know is that the bears or the sellers, they tried to push the price down, but it was ultimately rejected, right? So that's why you have this wick populate here. And we have a nice contrast, right? This big body candle, BBC. Can you be a BBC candle? I think so. All right, let's get back at it. Yeah, because big body candle, but whatever. I lost my train of thought. Okay, candle. So you see in contrast here, right, where the bulls or the buyers pushed the price up, they didn't have that much volume, but they were able to successfully do it. And another thing I want to be able to mention is that I'm looking at SPY on the 1 minute chart using Bollinger Bands. Now, Bollinger Bands allows me to be able to know if something is overbought and oversold, and it goes back to its average. Now, I want you to keep that in mind because that's going to come into play here, right? So when it came to being able to create our strategy, right? Let me use this block right here. I think this is a nice depiction. I'm not going to hold you. I'm still becoming a little bit more comfortable with being able to read charts and understanding what it's doing and what the market is telling me. But one thing that I would notice, right, is like, all right, bet I'm seeing a pattern here. And the pattern that I'm seeing is that, okay, and I don't really care about where it lands, kind of, but not really. The pattern that I'm seeing is that, okay, bet I'll see two green candles. Right now it's a little exaggerated, but I'll see two or three red candles, right? And then it'll go to green. Then I'll see a couple of green candles, then I'll go to red, right? So the strategy that I was able to come up with that is saying that, all right, whenever we see the price trending in either direction, that price could be trending in a bearish slide, right? We're going to buy a put just to be able to, a call to bounce that is going to go back up. Or if it's on a bullish run, we're going to buy a put betting that it's going to go back down. So the strategy that I came up with was being able to say is like, all right, bet if I'm seeing that there's two consecutive green candles or red candles, right? And then the next one is the opposite color, I'm going to buy what that opposite color is and then bet that it's going to ride back up, or I want to bet that it's going to ride back down. Now, I'm not going to hold you. There's going to be instances where it works, but there are also going to be instances where you can get wrecked, right? So let's go ahead and jump into our brainstorming session. Now, if you want me, don't worry. I know this is like, I'm going to make this bigger, pause, so you can actually see it. So our strategy type is going to be a mean reversion strategy. You can hardly see that. That's crazy, fam. Give me a second. I know. Don't worry. Let me see if I do this. Is that better? Let me try this. Okay, that's a little bit too gross. Let's try. And this is what I'm talking about. Like, I'm still doing this thing, fam. Let's do mean reversion. All right, bet. So this is going to be a mean reversion strategy, right? And what is a mean reversion strategy? I really should have thought about this. I was like, this is going to be cool, but I should have thought about it. Bet the price goes back to the average. Right? So this is, in essence, what a mean reversion strategy is, right? So we're going to be creating a mean reversion strategy using the S&P 500, and the S&P 500 is the top 500 companies within the New York Stock Exchange, right? Now, I know I keep saying the top 500 companies, but let's go look at the holdings so we can see some of this. All right, bruv, but the ones that I don't need, the ones that you strictly need, bruv. All right, accept and save. Goodness gracious. This could be a good thing. This could be super annoying. We're going to go down to holdings. All right, so I want to show you just a few of the companies that is listed within the S&P 500, right? We have NVIDIA, we have Apple, we have Microsoft, Amazon. This is Google. Don't ask me why they can call themselves Alphabet Incorporated Class A. That's just weird, but hey, this is Google. This is Broadcom. This is YouTube. How ironic. This is Facebook. I would never call you Meta. This is Tesla, and then we have Berkshire Hathaway Real Estate, or Warren Buff. So these are just some of the holdings that is within the S&P 500. And S&P 500 has 500 different companies within this ETF, and an ETF is an exchange traded fund. So whenever you think about an ETF, think about a quilt, right? And how each one of the patches within a quilt represents a different company. This particular quilt has 500 different companies within it, right? So that's why I love trading SPY. And again, SPY allows you to be able to gauge overall what the market is doing, because it's the top 500 companies, within the New York Stock Exchange. So we have the essence of the strategy. We're creating a mean reversion strategy, and that mean reversion strategy is going to bet that is going to go back to its average, right? And what we're going to be doing is, yeah, I really do appreciate y'all's patience. This is going to be 0 DTE options. Options equals options expire same day. So we're going to be trading option contracts that expire the same day, right? Because who wants to wait until Friday to get paid when you can get paid the same day, or if not the same minute? Sometimes that happens when you can enter to their trade, right? So the data that we're going to be using is going to be, I think this was 64. We're going to be using the SPY, open, high, low, close, volume, and that's going to be the stock data. And then we're also going to be using the option data. And then VIX. VIX is the volatility index. VIX allows us to be able to gauge if an asset is, or excuse me, if the market is expecting if the market is expecting a big pullback or if the market is expecting a rally, right? So it's the fear index, right? So right now, I think VIX just closed at 24. Yeah. VIX has been popping these last couple of weeks. I'm not going to hold you. Right now, it's at 23.52. But on average, on a normal trading day, VIX is in the teens. The fact that it's been averaging in the 20s these last couple of weeks, the highest I've seen was like 27, 28. Late last week, we seen VIX there. So when you are watching this, this is March 16th, 2026, right? So just to be able to timestamp it, VIX is at 23. So let's see how high it gets. So go ahead and drop it in the comments when you're watching. Go ahead and just look up VIX. Just put VIX price. And then drop in the comments what's the VIX price and go ahead and put the date as well. So let me go back to my little illustration. VIX is the volatility index, right? So VIX and SPY has a inverse relationship. What does that mean? Whenever you see VIX popping, you're going to see SPY dropping. Whenever you see SPY popping, you're going to see VIX dropping, right? Now, sometimes the relationship can help each other, but normally there is that inverse relationship. So I'm using VIX. That's pretty much it for the I talked about the conditions, so I'm just going to put here we spoke about it, but I'm going to delve more into this. So spoke about it. We'll talk more in code. And then the exits. Oh, going to be the same thing. Spoke about it. I'm going to talk more once we actually get to the code. Don't be that guy. You're definitely going to be that guy. More when we are coding. All right, bet. So I think this is a good enough place to be able to go over to our cursor. So what I'm going to do is come over to our coding session. Now, before we get into that, this is my process when it comes to actually developing a bot, right? I just don't, it's like, all right, bet, I had the little idea. I just don't go develop the bot and go paper trade it. What I want to do is we already came up with the strategy idea, bet. So that's good to go. Now, what we're going to do is backtest it. Backtesting means we're going to take our strategy, drop it off in a time machine, and I want to see how well it performs on historic data. The school of thought is that if the strategy does well in the past, then there's a high likelihood that it'll do well in the future. So what I want to do is say, okay, you know what? How well does it do in 24? How well does it do in 23? Shit, I'm maybe going to try 22 in 2001, right? Then I'm going to hold off on 2025, and that's going to be the last year that we run in order to walk forward validation, right? Just to make sure that what's happened, we didn't overfit the strategy. Overfitting meaning that the strategy, right, not necessarily cheated, but memorized all the answers to the test, and when it's taking the test, right, it knows all the answers. So you kind of already have a strategy that's not going to do anything for you, right? So I just want to make sure that we're not overfitting. We are making sure that we're validating our strategy by being able to backtest it. And then once we're done backtesting, we're going to walk forward. Then we're actually going to develop our bot. And then we're going to paper trade it live, hopefully, if I can get this done within this hour here. So let's go ahead and jump into our folder. So like I said before, I'm going to be using Cursor. And with inside Cursor, I'm going to be using Claude Code. One thing I just want to make sure. Because I was working earlier. I was like, oh, did I leave something open? But I didn't, fam. All right. What I want to do, let's go to our quick reference guide. So again, this is going to be our GotBrains mean reversion strategy because lately I had a little crutch. I'm not going to hold you, right? This is my first strategy that hold on. Let me just preface this. This is not my first strategy, right? This is damn near if I'm counting like 85, 88 strategies, not all strategies I make a bot out of, not all strategies Like I'm also, it's a process, right? Some is going to be good, some is going to be bad, some is going to be really good, some is going to be really bad. But nonetheless, this is the first strategy that I've made in a while where I'm not using trading view. Like I actually looked at the charts. Okay, this is what I'm thinking. This is how I want to be able to trade this strategy and see how it works, right? So I'm very excited about it. So that's why I'm saying that. So this is going to be a mean reversion strategy. So I told you what mean reversion is. We're going to bet that it's going to go back to its average. This strategy is going to trade maybe between 9:38 and 11:33. Now the reason I'm not catching the we're skipping the first 8 minutes, but within the first 8 minutes, what the strategy is going to be doing, or should I say the bot, is going to be being able to figure out the opening range, right? Being able to understand what is the market doing in these first 8 minutes. Then it's going to hand it off to the strategy. Then it's going to continue scanning, right? We're going to do max 3 trades per day, and the maximum hold time is going to be 2 minutes. Now, the reason I'm going to be doing 2 minutes, right, is because when it comes to trading 0 DTE options, one of the things that, and if you don't watch out for it, and the way I watch out for it is max hold time, is theta. Theta could kick your ass. Theta is time decay, right? So think about it this way: every minute that you're holding an option contract is like holding an ice cream cone, right? If you don't eat it fast enough, pause, is going to melt in your hand. So same thing when it comes to option contracts. So that's why I want to be in and out that thing super quick. So that's why I'm doing 2 minutes maximum, right? So this is how we actually get into the trade. Now, remember, I kind of talked about it with y'all before, but I actually want to get into it so you can actually see what we're talking about, right? So we're going to be looking at the 2 to 3 candles for the same color. So it could be 2 red candles in a row. There's going to be a setup for a call because we're going to bet that the market is going to bounce. So whenever you see a call contract, we're bullish on the market. Or if we see 2 green candles, 2 or 3 green candles in a row, we're going to be betting a put because we're bearish on the market. We're going to say that the market is going to go into a little bit of a free fall. So think of it like this: the market is pushing hard in one direction. Now it's running out of steam, right? And we're going to, all right, catch the drop and being able to ride it back up or ride it back down. Pause. So step 2 is the color flip. So just like I told you before with the S&P 500, remember we were looking at it. Let's just use this example here, right? I see 2 or 3 colors in a row. It's like, all right, bet my strategy is going to put his little antennas up. All right, we got something percolating here. 2 to 3 colors. Now it's going to wait for the flip. Once we catch the flip, now we're going to bet the opposite. That is going to go back up. If we would have bet here, maybe we would have caught a little 15, 16%, right? Whatever that would have been if we would have caught this trade and then got out by the next candle, right? Or maybe would have held it and like actually would have won here, being able. But the only thing I'm kind of scared about is that you see a big body, then it completely rejected these next 2 levels. So even though yes, the bulls did win, but these rejections here is just kind of scaring me because it's not showing that much conviction, whereas this big body right here is showing conviction. But it's kind of like a contrast, you would say, because some people are going to think that it's like, all right, bet there's conviction, got to be the volume behind it. But look at that volume is barely there, fam. It's not even that much volume behind this move here. It was just that much conviction that was behind it, right? So that another school of thought is that, or excuse me, another teaching moment is that you don't need that much volume in order to have a conviction move. It is nice. It is one of those correlation and causations, right? It's not always, it doesn't always cause it in order for it to be correlated here, right? So I love to being able just to see that example here. So I say that to say is that our strategy is looking for 2 to 3 candles in a row. We're going to watch that flip. Once we catch that flip, we're going to enter on the bounce. And then once we enter on the bounce, we're going to be able just to ride it for 2 minutes. And 2 minutes is just 2 bars. So we would have entered here. So it would have been 1 and then popped out here 2. Would have rolled that thing all the way up and then TP'd out. TP'd is take profit. Let's go back to our code. So think of it like this. It's a rubber band that just started snapping back. The candle confirms the reverse is starting. And then volume confirmation, like I said before, you don't need that much volume in order to have it, but I do want to see participation. So that's what volume is telling me here. So the reversal candle must have significant volume. I don't want to say significant. I just want to say participation, right? And that participation is just 0.88 times the 5-bar average or 5-minute average. As long as it's 0.88 times the 5-minute average, I'm ready to go, right? We want to see participation. I don't want to see that much in it, right? And then we're going to be using ATR. The reason I'm using ATR, which is the average true range, it allows us to be able to gauge if the strategy has velocity, if the strategy has vigor behind it, right? So we want to make sure that the move is not exhausted and that the move can't be too large, right? So what I'm saying is that, all right, bet. This is step one. We're going to be looking for 2 to 3 candles in a row, right? We see 2 red, that's set up for a put, 2 green, that's set up for, 2 red, set up for a call, 2 green, that sets up for a put, right? So then after we have our setup, and then we're going to look at the next candle. If the next candle is the opposite, that's going to trigger it. Then we have to make sure that we have sufficient volume. Once we make sure we have sufficient volume, then I want to check that the move still has legs in it, right? Like it's not an exhausted move. So if the price has already moved 2 to 3 times ATR, the reversal might already be done, or the continuation is coming, right? Continuation meaning that, all right, bet it's not no longer a bullish, or excuse me, it's not going to from a bear to a bull. It's just going to stay straight bear. Or if it's not going from a bull to a bear, it's just staying straight bull, right? So that's why we want to check ATR. And then next thing we're going to be checking is VWAP, which is the volume weighted price average. I like to use VWAP just to be able to make sure that I'm getting a good deal, right? If I'm paying over VWAP, that's letting me know I'm overpaying. If I'm just below VWAP, then that's where I want to be. And then we're going to have the signal grade. We only trade, B and C, A and B, and then we skip C and D. And then if all 3 go, or if all 6 go, then that's where we're going to have our trade. And what makes grade A and B signal? What we're looking for is the VWAP is tight, right? Again, the price is within 0.03 of the VWAP, very close. We're looking for a strong body. The reversal body is greater than the 5-minute average. Whenever you see bar, just replace that with minute. And then a sustained move setup is less than 0.8 ATR. It is not exhausted. And then a favorable close, a call close with 70%, and then a put close with less than or equal to 30%. And this is how we get our grades. And this is our exit rule. So I know I told you we're going to talk about this before, and I'm doing this review now. So when I actually go review the code itself, because I do have that, we're actually going to be able to, oh, that's the strat. Here's the back test. We're actually going to go over the code and actually do a couple of things so we can actually understand this proper. Because I have another file that I want to go over with y'all. Then we're going to run the back test. Check the performance. If it's performing well, it's like, all right, bet. Do I want to create the bot, or do we have a couple other things to get done? So let's finish this real quick. So how do we exit the strategy, right? So the way that we exit is 4 ways. So I'm looking for, and I used to do it a little bit more complicated, but again, with more time, you learn to do it a little bit more better. So the way that we're going to exit is that first way is going to be a TP, or take profit. So we get into the position. If I'm up 16.8, all right, you don't go broke taking a profit. So give me my cheese. I'm going to clear it, right? Or if I'm down 12% on the position, go ahead and cut my losses and protect your capital. Or we're going to have a trail, and our trail is going to be our trailing take profit. So the way that the trail is going to work, once I'm up 8% on the trail and that arms is being able to activate. Don't ask me, I tried to figure out the other day, why is it called arms? And I think I was told that it's like, oh, you know how you arm a security device, or how you arm a weapon, for lack of better words, in order to get it activated. So that's the same way that they borrowed that term here. So basically in all trading circles, whenever you arm a trail, you're activating it. So don't let that confuse you, because at one point, like, bro, why are we arming the shit? But whatever. All right, but nonetheless, we arm it, we're activating it at 8%. And then if the distance is going to be 2%. So what does that mean? All right, bet I'm up 8% and I'm going to activate my trailing take profit. And then if I ever drop 2%, no, bro, no, wait, back your ass up. If I ever drop 2% from the peak, get me out of position, right? So what it does is let the winners run, and then protect our gains. And then we have 2 minutes for all of this to happen. We have 2 minutes in order to take profit, 2 minutes in order to, if it's going to be a stop loss or not, 2 minutes in order to get out of the trail. So reason being so is because, remember, this is how we're protecting ourselves against theta. If you're not protecting yourself against theta, you are wasting your time when it comes to being able to invest in 0DTE options. But again, I want to say that this is not financial advice. If you do seek financial advice, please make sure you talk to a certified financial planner, those that are licensed, in order to assist you with your financial questions. This is merely educational, big bruh. And lastly, how we're going to, I think that's a nice one. I want to go through that as well. How we're going to select our options, right? So 0DTE, same day options only. And then we're looking at delta. So delta tells you two things, and delta is a Greek when it comes to an option, right? So delta is going to let us know for every $1 movement, the option contract that you're going to purchase is going to move up by whatever delta is. We're going to call delta N, right? So for this particular instance, N equals 0.25. Now remember, for every option contract, there's how many shares? Don't worry, I'll wait. There's 100 of them things. So for every option contract, there's 100 shares. So in order to get, like, all right, bet this option contract just moved up $1. The stock just moved up $1. If the stock just moved up $1, this option contract just moved up $25 if the delta is 0.25, or if it's 0.55, if the option contract, if the stock just moved $1, then this option contract just moves $55. Now, why? Is because 100 shares. Remember, 100 of them things. So you got to take 0.25 multiplied by 100, and that's what you're going to get the underlying delta to be. So just by looking at this, is this, I remember I just want to pop quiz your ass, but just by looking at this, is this ATM, OTM, or ITM, right? So let me give you the answer to that. I'm a little bit of OTM, a little bit outside of the money with this 025. So I'm looking for a little bit of lottery ticket option contracts. So option contracts that are a little bit not as expensive, right? Then I'm a little bit inside the money, not too much. I'm ATM definitely, because all that range in between is ATM, but I'm a little bit ITM, right? In the money. Reason being so is because the closer that you get to like 0.70, like 0.68 type shit, that's your closer that you are in the money. And the goal of an option contract is to be able to buy it, get at or in the money. As soon as you get at or in the money, you are making money, fam. And then this strategy can only buy option contracts between $25 and $100. Open interest is letting me know that how many individuals have the option contract actually open. It's going to be 500 minimum, but SPY is one of the most liquid contracts out there, or liquid ass ETFs out there. So that's kind of almost a redundant thing now that I'm actually thinking about it, but hey, whatever. And then a bid-ask spread is 10% of the mid. So we just want to make sure that we're not getting in underwater for the particular contract. So this is how our setup is going to go, fam. If we have a 2 to 3 red candles in a row, we have a bearish exhaustion. And then we're going to see that green flip. So we have our reversal trigger. And then we want to make sure that there's participation, right? Once we have the participation, we're going to be like, all right, bet that confirms our move. Then we want to make sure that the move is not over exhausted, that there's still enough room in that in order for that thing to run. And then we also want to make sure that it's within or near the mean, right? So the grade gates, we only trade grade A and B signals. And then the puts is going to be the inverse. So let's go ahead and jump into our code. So this is a Python file. And the reason I'm using Python, I'm not going to hold you. That's what I was taught on. That's how I learned. When I first started this thing, I thought I wanted to become an AI engineer, like be out there creating the chat GPTs, your Claude Codes, your Perplexities, your Geminis of the world. Then I found algo trading. I was like, bruh, where has this been? Listen, I'm not gonna hold you. When it comes to like investing, like everybody's been doing that, right? Like everybody has like bought a stock or like, all right, fucked around and bought an option, maybe like specifically maybe even around COVID, like everybody wanted to take an opportunity to be able to do it. I think that's when 0DTE became a lot more prevalent. It was around 2022, 23. It became a little bit more, it's like, all right, bet, man, there's a demand here for it. Let me actually do the thing, right? So I first started, I wanted to become an AI agent. I found algo trading. I was like, bruv, where has this been all my life? And then when I first started algo trading, I was market making cryptocurrency. So I was market making Bitcoin, Solana. It was cool, but that really wasn't what I wanted to do. Then I found options. It's like, okay, this is where I'm at. I'm home, right? So lately, so that's why I'm using Python, right? You can use C++. I'm not going to hold you. I feel like that's overkill. Specifically what I'm doing it more so for myself. I'm not doing an institution. I'm not raising money. I'm not trying to start a fund. I'm not doing any of that, right? I'm not doing a prop firm. Maybe not yet. Maybe I'll do a prop firm later. But for right now, I'm not, right, fam? It's just me, big bruh. So that's why I'm using Python. It gets the job done. It's super easy. It reads like a book once you understand how to do it. So there's a couple things I want to go over with y'all so we can like proper get it. And then once we understand it, then we can actually like get into our work. All right, bet. So I kind of already went over the strategy. So I'm not going to go over that again because we kind of already did that, right? What I want to do is just go over this code real quick. So there's a few things that I want to go over, just real quick, touch on, so you can understand what I'm saying. All right. So whenever you see a def, right? A def is going to make, in other words, means define. This is the keyword that creates a function, right? It's short for define. Def means I'm creating a reusable block of code called ellipsis, blah, 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 whatever it is, right? So def my function, def is going to be define, and the function is named my function, right? So def is going to be define my function. So def to use two things, you're going to define your function there. I hate when it does that. So function is a reusable block of code. You give it an input and you get the output. So an example was be def, which is going to be define, and the name of the function is going to be add. We're going to add the items that are in A and B. So def, remember define, the name is going to be add, and the parameters are going to be A and B. We're going to return A and B, and just see here, return means, hey, give me this back, homie. Like, I'm not just asking for you to be able to swallow it, pause. Like, I need that back, fam. Run me that. I should have just said, run me that. Run me that. Just get a little bit colloquial with y'all. All right. Return A plus B. What it means, hey, run me that. The result equals add 2 plus 3, and you're going to get 5. So return, we also got run me that. And then we have class. Class is going to be the blueprint, right? This is going to be the blueprint for creating the object that bundles the data and behavior. So class is dog. Then you have these functions here in the class. Now, one thing to be able to keep in mind is that these functions are only usable by the items in this class, right? So if the dog doesn't call its name, right, and if it doesn't bark, type shit, then nobody else can call that. Like, this is completely for the class, right? So this dog. Then we have an init. Init is going to be initialized. That sets up the function, so it runs automatically when you create an object. It is where you set up the starting data. So def is going to be the start of our function. Init is going to be initialized. We're going to initialize the self. The self is going to be the object, right? The name is going to be the parameter, and also age. So object is self. So name, self, that's what we want to name it. Like, all right, bet, give me the name, the age, 3. So my dog is the output, right? It's the object, right? The dog is name, max 3. So the double underscores means that the special method in Python, you define it, but Python calls it for you behind the scenes. And then lastly, let's go over is self. Self is going to be this object. Inside of a class, self refers to the current object instance. It is how the object accesses its own data. So here, stores price on this object and then access the price from that object, right? So note, self is always creating the first parameter, but you don't pass it when you're calling it. Python handles it automatically for us. So I bet we got it. Gucci. Let me just save my little edits. All right. Couple things to go in mind. I'm using random. Reason I'm using random random library from Python is because there's a couple. I want to randomize the slippage and the fills to make sure that we can make it as realistic to trading as possible. Then we're using NumPy. NumPy is going to be the calculator for Python, right? And then we have Pandas. Pandas is going to be the Excel for Python, right? So this is how we're going to manipulate our data, and this is how we're going to actually calculate our arithmetic from our data is going to come from NumPy. And we're also going to be using DuckDB. DuckDB is just another Python library that I use in order to load the data a lot faster, fam. Because I don't know, if I ain't gonna hold you, if you go watch some of my other videos, like a backtest used to take me like 10 minutes, fam. Now it's under 40 seconds. DuckDB, Polaris. I'm not gonna hold you. There's a couple things that I learned. It's like, all right, bro, let me put y'all on as I'm getting put on. And then Scriffy stats is what we're using in order to create, in order to use for Black-Scholes, but more on that in a bit. So this is where we're getting our data from. We already talked about we're getting our stock data from SPY. SPY is the S&P 500. Then we have our option data. Then we're using VIX. Then we're bringing in the treasury data. The reason I'm bringing in the treasury data is because I'm using that in order to calculate gamma. So if delta tells you how much money you're going to make for every movement of the stock, right? Gamma is going to let you know how fast delta is changing. So if something has high gamma, that means delta is constantly changing. If delta is constantly changing, especially in your favor, what are you doing, big bro? You're printing money. So we want to be able to calculate gamma. Where I got my option data from, bruh, I'm not going to hold you. Like, it didn't come with gamma, but that's okay. I have everything I need in order to calculate gamma, and I'm using Black-Scholes, and I'll show you how we do that. So with all of our strategies, unless I tell you specifically otherwise, I'm starting with $100. Right, because I want to dispel the notion that you need thousands of dollars in order to trade options, especially algorithmically, right? So keep that in mind. All the strategies start at $100, and the minimum that we need to trade is 10. And this is how we're going to size our positions. This is for VIX. So slippage is the difference between what you thought you was gonna get and what you actually get. So when you actually submit an order, right? Let's say you submit a limit order for $100, right? And the order fills at $95, right? The difference of $5, bruh, that's the tax. And some people like to call it slippage. But just to keep it a buck with you, that's just the tax we're paying the market. It's not really a tax. I'll colloquially call it a tax, right? But like if we want to be real, it's called slippage. And it's the difference between what you thought you were going to get and what you actually feel for, right? And remember I told you I was using random. Well, this is where it's coming into play here. We want to make sure, because with the backtest, one thing that can happen is that it can be overly optimistic. So I want to make our practice a lot harder than the game, right? So if I'm making practice a lot harder than the game, we should slide. So what our fill probability is telling us that don't fill 100%, fill 98%, right? The probability of a widespread 90%. And the widespread threshold is 3%. I'm not using the adaptive sizing, so I'm just going to skip over that. We also have our fees in our option contract because, bro, there's nothing for free. So you want to make sure you model that. We also have our milestones, right? Because I want to gauge how long does it take a strategy to make $125 starting at 100, 150, 125, all the way up to 100,000, right? And then see how well the strategy performs. So that's something that'll be interesting to do. Here's our strategy specs. We already talked about this, so I'm not going to go over it too much. One thing I guess I didn't talk about was the ATR period. Remember, period is just in a way another saying minutes. So it's taking 3 minutes in order to make sure that the move is not exhausted. We also have the volume confirmation. That's the participation. This micro sweep, right, is looking for liquidity sweeps. What is a liquidity sweep? Excuse me. I ain't want to burp in your ear. Hold on. My fault. My fault if you heard that. I'm sorry. I had a burp and I tried to mute the mic, but I don't think it muted. I think I burped. Whatever. All right, fam. What is a liquidity sweep? Liquidity sweep is when market makers are trying to trigger stop losses that are at round levels. So what do I mean, right? So let's go back to the S&P 500 real quick so I can show y'all an example of maybe a liquidity sweep. So SPY right now is at 669.70. The next round level is going to be the 670 level, right? So what liquidity sweep is that you're going to have market makers, i.e., whenever you want to buy or sell an option, where who you buying or selling it from. If it's not a retail trader like myself, it's going to be realistically from a market maker. And sometimes market makers want to be able to push prices up. And the way that they push prices up is that they force people to trigger stop losses, right? The way that they force the trigger stop losses is like, all right, panic. I'm gonna sell, right? Then once it peaks towards the support level or the sold level, right? Then what happens is that the market maker is already in the position. They just ride that thing right back up, right? So what we're looking for is micro sweeps, right? I just want to gauge if this strategy is impacted by liquidity sweeps. And then this is how we're going to exit. We talked about loading our, remember, let's just go over this real quick so we can all right, I know how to read code. So def, what is def telling you? Def is defined. What is it defining? The function, right? So this function is going to be load treasury rates. So PD is going to be the data frame that is creating. So PD is pandas. So you see PD, pandas. So when you're loading pandas, we're going to load it as PD, right? PD pandas. So pandas, remember, it's our Excel. So I want to create a data frame using pandas or Excel, right? Then our global is going to be called treasury rate. If treasury rate is none, we're going to that data frame that we just created, right? Data frame equals PD pandas.read the CSV file, and then you're going to get the treasury path. You're going to parse it the dates. So you're going to organize it by dates. And then I also want you to index it. Then I want you to sort it, and then I want you to return the treasury date when I need it. So that's what this file is saying. And here's for 1 minute, I'll bet. And then we're just jumping into Black-Scholes. This is what I love, right? So then, Black-Scholes allows us to be able to calculate gamma. Now, because I don't have gamma, I had to calculate it using Black-Scholes. Now, def, remember, I'm defining my function. What is that function called? Calculate Black-Scholes or BS gamma. And then what are the parameters that I'm taking? The parameters that I'm taking is going to be S is going to be a float, right? KTR float, and then sigma. And then Black-Scholes is the calculation here. If T is less than or equal to 0, or sigma is less than or equal to 0, or S is less than or equal to 0, return 0.0, or the data frame 1 np.logs. So you see here, I'm not going to read the whole thing, but this is how we calculate gamma. And we already talked about slippage. I feel like I've been talking a lot. So let's go ahead and run our back test, fam. One thing I need is my conda environment. So what is a conda environment? A conda environment is where we have all of the Python files that we're going to need in order to run our back test. So this is their conda environment. It's called Algo, baby. All right, bet. So we're running our back test, running the back test on 2024. I feel like I've talked a lot about it so far. You understand what the back test is. You understand how it works. You understand what it's doing. Remember, we're starting at $100, and let's run our back test and see how well it performs in 2024. Remember, you take our strategy, drop it off in a time machine. I tell that time machine, all right, bet, go to 2024, and I want to see how well you perform. I forgot that it did this. The first 50 trades, right? The first 50 days, and March 3rd, that's kind of funny. March 13th, which is Friday the 13th for us, right? The strategy and the first 50 days made 2,600, 128 trades, right? Then 100 days later, 50 days later, it was able to almost damn near double that money. So it went from 2,200. So start at $100, fam. So keep that in mind. Started at $100. 50 days later, it's at 2,200. 100 days later, it's at 4,900 with 251 trades. And then 50 days after that, it's at 27,000, fam. And then another 50 days after that, we're at 95,000. Again, keep in mind that the strategy is starting at 100 bones, fam. It's starting at $100. I made this back test as hard as possible. So let's look at the numbers. The strategy was able to go from $100, and then it went to $161,837.95. I know. Just take a moment. I know. We have a max drawdown, excuse me, of 4.7%. So what is that letting me know? At that one point in time, the strategy went from $100, let's call that 86 bucks, right? 86.30. It went from 100 to 86.30. It felt so bad. It felt so bad that it finished at over 100,000. We had 600 trades, and out of those 600 trades, we had 70%, so 7 out of 10. The average win, which wasn't crazy, was $455. The average loss was 167. The average return was 6.7%, and then the average hold time was 1.9 minutes. So our exit reasons, EOD, then we have stop losses. We only had 17. So this is kind of a good thing. I'm not going to hold you. Out of 600 trades, we only had 17 stop losses. And then time stops was 379. We're positive on our time stops. That's what's up. TP is take profit. We made 100% on when it TP'd, and then our trails, we had 51. And again, we're only taking A-B grades, right? So out of our A-B grades, of course, A would be higher, and then B is just slightly below. And then I also wanted to gauge out of the 2 candle and 3 candle setups, which one is better. And you can see here that the 2 candle setup. So what does that mean? We're going to wait for 2 reds and then bounce on the next green. Excuse me, or we're going to wait for 2 greens and then bounce on the next red. And then calls and puts, it's kind of almost the same thing, 70-70. So this is a good thing. Look, it took 2 days in order, remember I told you the milestone, right? It took 2 days in order for the strategy to go from $125, then to get to 250, 29 trades at the 18th, and then to get to $1,000. Just by February, the strategy was at $1,000, fam. And then by July, it was at 10. And then by October, it's at 100K. So if I would have ran this strategy in 2024, gave it $100, and all I had to do from start to finish every day is just turn on the strategy, make sure that the data is connected, right? Make sure that it's able to trade, turn it on, turn it off, turn it on, turn it off. Would have finished the year at 161,000. I think that's kind of ridiculous, right? So let's go run 2023, and let's see if there's consistency with 2023. So I want to run the strategy, the backtest in 2023. Now, remember, you saw 50 days at a time, so just be patient with me, fam. For 2024, we were able to see the strat went from $100 to 161,000. Now let's see how it performs in 2023. Same thing we're seeing here, right? The strategy in the first 50 days, it made to 2,100, right? Out of 112 trades, then almost tripled. Went from 2,100 to 6,700, and the trades almost doubled as well, right? Just a little above. And then damn near 3 times his money. That 3 or 4 times. Damn near 4 times, right? From 6,700 to 28,000 in August, and then it went from 28,000 to 97,000. So we can see that the strategy is robust. The strategy is able to be consistent, right? Now, one thing, 100 to 141,000, right? 70%. We're seeing consistency. $400, $200. Average loss 6.4%. It's not crazy numbers, fam. That's what I'm saying. Consistency is key. 8 point. Those, so the drawdown is lower for 2024. My fault. You know, I didn't talk about before is the profit factor and the Sharpe ratio. So the profit factor is that for every $1 that the strategy lost, it made $4, and the Sharpe ratio above 9%, bruv. This is hedge fund levels, right? This is just letting you know that your risk management is a chef's kiss, bruh. So just quite consistent with it here. Again, 4 days, 3 trades in order to get 125. In order to get a grand, a Valentine Day, not time. In order to get 10K June and 100K October. So it's not bad, fam. Not bad at all. Now, what I want to do, now I don't know. So keeping this in mind, 2024, super trending year, bull trending year. That's what I was trying to say, excuse me. 2023, we have a mix, bear in the beginning, bull in the end, right? So I now want to run it on 2025, right? 2025, I'm still trying to put my finger on, but if I were to say anything, the Q3 and Q4, I would say ended off on a bull run, but there was some quiet days, right? But there was a little bit of a bear in the summer. Summers are normally quiet, and then Q1 it did. I wasn't trading all that too much. Like I didn't really get into it like really heavy into it until like October. So I mean I know it from like reading it type shit, but it ain't gonna go. But all right, let's run it on 2025. So we went from 23. Now I run it on 2025. First time I'm running it on 2025 live with y'all. So this will be interesting to see how this goes. And based off how this works, this will let me know if we're ready for the next step here, right? If we're ready for our bot development. So right now, I've already back tested it. I'm walking forward to be able to see if it's validated, right? If the strategy is going to be consistent. So if the strategy is consistent, then what we're going to do is just go ahead and jump and go ahead and make first 50 days, 2,100. So as we're seeing a consistency, right? I'm just going to get the other folder ready. So when I'm ready to make the bot, because I think this strategy is ready to go, fam. The strategy is ready. And I wanted to make this video under an hour. So if I just rush a little bit, don't be mad. All right, beautiful. I got the next one ready. So we're ready to make the bot. We'll be Gucci. So I'm letting y'all watch the back test, and I'm just gonna have to get this other folder, other work. Just give me a second. Give me a second. Y'all watch this back test. Y'all let me know how it's going. If there's anything you think I should see, let me know. I mean, I'm watching it too, because the strategy damn near double, if not triple, this money. The fact that it went from 7,000 to 46,000, I think is ridiculous. But hey, who am I? Who am I? I think that's just a bit. It's ridiculous. It ain't myopic. I ain't small-minded, bruh. It's just ridiculous. From 46,000, damn near almost double, just under. From 46,000 to 121,000, bruv. If I must say so myself, this strategy is ready to go. Yeah. 74%. First time we seen 200,000 strategy. Even where's the max drawdown? Oh, max drawdown is not bad. Sharp ratio is still at 9.18. And then we have our profit factor 6.24. Yield, bro. This strategy is sliding. All right, I'm convinced. What I'm going to do now is my fault. You need to come see this. Pause. We're gonna now bring in Claude Code so we actually develop our bot. So what I did, because I have a couple other bots that I run, I kind of made this process where I made template files for all of our bots, so it makes it easier to be able to create one, right? And then we have 21 bots currently, and I'm going to make the 22nd bot with y'all here live. And this is going to be based off this little mean reversion strategy, GotBrains, that we just created. I walked through it with y'all. We ran the back test for a couple of years. Now we're actually going to create our bot, bruh. So what I'm going to say, just give it a little baby prompt, is you are a senior Python developer with expertise in 0DTE Algo trading bots. Read. So I just want to give you that. Yep, read for context before we get into the work of creating our next bot. Now, you are required to use the skills that is available to you and make sure that you keep all of your output responses under 312 total tokens for each output response. Beautiful. Now, is going to do that. I need to create GotBrains. Then what I need to do is go ahead and let me just go ahead and copy all this. It's not gonna hurt. Let me copy you from you, and then copy GotBrains. All right, skills used, none yet, awaiting tasks. Okay, we have 10 templates, copy, never move, golden checkout rule. All right, beautiful, proceed. What's your strategy? New bot concept. All right. I love that, bruv. Read to understand our strat that we are going to make into a bot. And then what Claude Code is doing right now is gaining context, right, or building context. So I just reviewed everything that it went over. It's reviewing right now that it's reading. So we went over the code, we went over the guide, we went over the strategy. We've seen the results for 3 past years, right? So our strategy is validated. Now it's just a matter of being able to develop our bot. So we're right here in the process, and then tomorrow we're going to be paper testing, and maybe I'll be live. Maybe. All right. Gucci, reading docs, meme reversioning via candle exhaustion. Okay, we already went over that. Our TP. Oh, it's 6. I thought it was 16, but it's 14. That's what's up. Well-validated strategy. All right, beautiful. What should the name be? Revert, baby. Nah, GotBrains, bro. GotBrains. Strat is going to be called GotBrains. Let's make sure we do this correctly. Let's get started. Please make sure to use skills and cite when using, and ensure to follow instructions. And I really want to give it. All right, let me just let you read this. For data, read. So it can, like, there's no assumptions, which should already be tended to via the template, but still, once ready, let's check out the templates, then get this show on the road. So yes, I have it where we check out the templates because it is better to have as much data as possible, right? Than little, right? So what I want to tell you is that it's like a library, right? If you check out a book, you want to be able to say, all right, bet, who's the last person to check out this book? So we can keep track of if there's any data issues, if there's any problems or anything at all. All right, bruv. Yes. Nope. We are using the exact parms that is in the backtest, and make sure not to assume. If you have any questions at all, ask us. Do not assume, bruv. No assumptions. That's what's up. We gonna have our bot. Goodness, paper, bro. It's paper. Paper first. Paper first, bruv. Yes. Yes, that is correct. Starting here. Use what is validated and backtest, bruv. Meeting ties from backtest, query actual. No, fucker. What? Got it. Mini tiers from the backtest, query actual. No. At runtime. No. Directory is going to be the same that we told you. And for the balance, do not assume, bruv. I just noticed something that was trying to do. It was like, you bitch, you. We have that will take care of this. this, but needs to be updated for the specific bot. The bot is going to have a virtual balance that will be maintained outside of using the paper trading account, which is much larger than what we trained the bot on, or strat on. Sometimes you gotta like chin check, bro. Like, bro, I know what I'm doing. Got it. Virtual balance. Separate from paper account. Let me read it. Yes. Nope. Starting with 100 and same tiers, bruv. I feel like I answered that question already. I feel like I've answered it, and you are telling me the same thing. So while it's trying to figure out its life, let me tell y'all. All right, fuck, man. Yes. Single file. No. A single file like we have for the other bots. Holy shit. Like, bro, like stop trying to be a teacher's pet, bro. Just like get the fuck on. Oh my goodness. Looks good. Let's get on with it. Let's proceed with implementing it after you checked out the templates. I appreciate you. We're almost there. You know, I'm gonna go grab it some agua. Even on a recording, I can do that. I just want to make sure, like, you're actually coding the shit. I feel like sometimes you gotta put this is the fuck I'm talking about. Yes. Yes. You do not need to write the specs. Proceed to implement and code this already. We have the plan and discussed it. Let's implement it now. Proceed. 45. Yeah. Let's get it done. Stop capitulating. Sometimes you gotta tell it about itself, bro. Sometimes you gotta be like, bro, if you don't get the fuck. Thank you. I know I'll be fighting this shit. I was about to say, there we go. Talk to me nice. All right, beautiful. Now let it do its thing. Give me like 2 seconds of a minute. I'm gonna grab some agua. Damn, did it go on strike? Did it go on strike? Oh, I was about to say. I was about to say. This is where things get. All right, I kind of want to show y'all something too, but I want to stay focused because you know what I want to do? Let me get a terminal. Let me get a terminal up. I just want to figure out you got mail. Like AOL. That'd be dope if it would have said you got mail. All right, hold on. What I need is that you come back here. Get our content environment so you can actually see it. Let me like just blow this up. Ridiculous. All right. What I also need is the path. It's the path. You got brains. CD, go to the path. And then Python, got brains. Bot, .py. I think that's what's gonna be called. So I can oh, matter of fact, I can test files in here. You know how I can test them? Or I can just say Python. Copy the file path. Come here. Paste the file path. Beautiful. All tests passed. So that's what I'm gonna do to keep up with your ass. Be like, bruh, did you pass my test? Wait, fucker. Wait, fucker. Signal. Recognize may be filtered. What is that? Selector Q. Okay. Why is it starting with a K? Insufficient data rejected. Is that the test? First, before you do that, let's make sure that the accompanying files are good and updated for bots specific needs. I.e. option, selection, position, management, etc. before we create the real bot, the main bot file, and ensure we are good with the parts before we create the whole. I know that's like the same sentence twice, but whatever. That's a run on sentence. And like another 5 minutes or so, bruv, we should be good. Oh, you know what I do need to do? You know what I do need? I need the music. Oh, look at that. But you wanted just to run. All right. What I do need is the music for the bot. I get all my sounds from Epidemic Sounds. Oh, damn. Look at this. I just started. And we're about to compact. Bruv. I'm glad I made you do that because I would have cussed you out. Let me check the position monitoring for any customization. Verify all template imports are correct. Oh, bet you already running it in the Algo. All right, bet. I did the same thing. What does that mean? Using K selector, KQ selector. Consecutive logic. Let me do the position. Okay, bet. Okay, guapeter. So I gave you a clean bill of health, fam. Hold on, bruv. Make sure there is no mocks and all real data is connected. That is why we showed you those JSONs previously. Go back to the data file and make sure it is connected and no issues with getting data, bruv. All right, while it's compacting, I need to go get the music. And you see how, like, you little cheap bastard, compacting on 7%, but whatever. All right. I need to go grab the music real quick. Let me just open this folder. And I use Epidemic Sounds in order to grab my music. So I'm going to do is click on Discover. I'm going to come here. Let's see if we can find a few that sounds nice. I don't like to use dark. Reason being so is because why do I want anything dark? So let's see how this sounds. That slides. Y'all gonna see how I'm gonna use this. Don't worry. I feel like I'm in the booth. Hey Molly. Yo people, I hear you. I hear you. One time for GotBrains. One time for the people down. Alright. I get all types. Let me see what this astronaut one. This may be super loud for y'all. My fault. I'm not feeling that one. Let's see if we can find some other ones. I need instrumentals, bruv. If I come up and I fall off, that's I need instrumentals, bruv. I get all types. Diablos, no. No. Let me say discover. Oh, y'all give me a new batch. Bet. Let me see this one. It's for the gang down. I slide with that one. What y'all think? Yeah, I'm gonna slide with that one. Bet. All right, let's come back here. I'm gonna show y'all what I'm gonna do in a little bit. All right. While that's doing that, I need to make so all of our bots, whenever it gets into a trade, like I like to have an open and enclosed sound. So what I'm gonna do is just go grab those two sounds that we just got. Then I'm gonna drop it in this folder here. So what I'm gonna say is we just added two new music files from today 03/16/2026. This is going to be open and close 22. All right, what are you doing? I was almost there. Okay, everything's legit. Everything's legit. All right, so what's going on right now is I'm having Cursor's AI because I keep it. You only do like super basic things. What it's doing right now is taking those two sounds and it's chopping it up for us so it can make the 22 open and close, and then it should pop up here. New alerts. You see, 22 should pop up here as soon as it's done. You see 22? You saw 21, now it's 22. Let's check. I just blasting that in your ears. I'm sorry. Ooh, shit, we got our open close round. All right, GotBrains Bot. Bet. I appreciate it because sometimes it can be a little thick. Save my life. Just want to make sure it's right. For the gang. I bet. Thank you. Now I'm going to come back here. I want to say clear, Python, drop that. I told you, so I showed you how I got the open close sounds because I like to be able to keep that. Sometimes I'm away from my computer. Whenever I hear those sounds, like, oh, bet we got the main bot file. Why am I tripping? Wait, what the fuck you mean entry point? Oh, structure logger. Got you. I feel like I just saw it though. This is our structured logger. So whenever we have our logs, let me show you an example of one. This is our early worm bot. So this is our logs, right? What I can do is just go through this and like automate it, be like, all right, bet you found a signal. This is what happened, and everything. Like, all right, cool. But what I like to do is create a structured logger that, number one, it creates this structured log for us, right? So the structured logger. And there also is going to be a log analyzer that we can programmatically just go through all of these trades and be like, all right, this is what worked, this is what didn't work, and this is how we can improve it. Now the impetus behind me actually creating this bot is, while I'm waiting on this, let me show y'all. Bum Moo Trail. Let me show you something. Boom. And then, oh wait, it's here. And then where you at? Trade report. Let me show you something. Then we're going to hit J. Then you should definitely should have popped up, but I guess that didn't work. I could use 4.6 for this one because it's not that much what we're going to be doing. That's kind of cool. Welcome back, Kreative. Thank you for being so nice. Hold on. I'm going to actually pull our month-to-day trades, and I'm going to have it create a calendar so we can actually review it. So I can show you the impetus behind this. Review, and then pull our MTD, month-to-day trades, across all bots, and then create a calendar for it so we can review. So I'm going to let that do its thing. I know I'm kind of be like a little ADHD, but that's okay. I'm proving a point. Why, like, the reasoning behind creating this bot, because like running 22 bots, yeah, it's cool and all, but there's sometimes you need to retire a bot. Sometimes you need to, okay. Bet. Shit. See what I'm screaming? Review and let's fix. All right, you should be good. When that's done, I'll let y'all see. There's just a couple things. So, all right, bet. You see, now it's pulling the trades. Bet. When it's done, I'll open the calendar so you can see it. So y'all can see the reasoning behind this, fam. Bet. Is that true though? All right, let's run this again. Let's run this again. That's what I'm screaming. I love it when it works, bruv. We have a bot, ladies and gentlemen. We have a bot. I'm doing a little Rocky stance right now. This is kind of dope. So it just took me a little under 90 minutes to be able to get this done. It usually used to take me 4 hours, but 90 minutes to get this done from start to finish. That's what's up. We have our GotBrains Bot, right? So this bot hasn't paper traded yet. This is March 16th, 2020. I'm 6 when I am recording this. Hopefully I could drop this today or upload this today, but whatever. But nonetheless, this bot hasn't traded yet, and I'm going to be paper trading this bot starting tomorrow. And what I'm also going to be doing, and I'm going to keep doing this, right? It's just dropping these update videos, like 2 to 5 minute update videos, so y'all can see how the bot's been doing, how's it been performing, and all those such things. Bruv, I asked you to do one thing. It's still running. Oh, y'all see? Okay, month to date, we're up 2,500. But I'm going to show you why. All right, bet. The impetus behind me creating this bot, right? So I can actually, so we can go through this real quick. But that's what's up, man. You still got some more work to do. This bot is live, bro. And it just went through a couple cycles. It know that the market is closed. It's scanning. It's actually pulling in the data. And I'm freaking geeked. All right, that could be a little better. So if I'm going to be picky, let me just be picky about that. When I control C it, like just tell me, all right, I'm done for the day. Here's my report, instead of having to do this. So that can be cleaned up. I'm going to clean that up real quick. It is good. Let's clean and fix this. When we hit Control C, bot should gracefully shut down, and give us stats for the day. Then chunk the deuces until the next time we run it. All right, open. So I have the calendar. The calendar's ready. Now we're just going to open it so we can actually review it. Bet. Here's the calendar. All right. So while it's doing that, let me just go ahead and review this calendar real quick. So this is March 2026, month to date. Right. I'm going to go to that little big trade that we had today. But so month to date, I'm reviewing my bots. Right. And I'm like, damn, there's a couple of bots that's kind of like dragging down performance. Right. So if I'm just looking at this, I see Gappy Up, VWAP, Star Baby, Meanie. But if I go down to the bottom of ADX, I'm kind of going to give it a pass because this bot has only been trading for about like 2 weeks, a week and a half. So like I'm going to give this one a pass. Easy's just been one of those ones, like I had to update a couple things for it, right? But that's not a really good example. Okay, here we go. Kid, this bot has been trading since day one, bruv. This bot hasn't really been doing what I wanted to do. So this is one of those bots I'm going to retire. Gappy Baby is another bot I'm thinking about retiring. If I'm looking here, Penny, not really. I need to find out why we're untagging, but let's just go here real quick. FB Baby, no, because this bot is still new. But a bot that I just dropped, and don't worry, I'm going to make a video on it. This bot is a bot that I'm using a new type of algo in order to trade it, right? And I'm kind of interested to see how this goes. But nonetheless, I'm going to make a video on it and how it works. But this bot trades both SPY and QQQ, and it has a little bit of machine learning in it. And it's first day trading. It's first day out the gate. This bot made $2,000 off 9 trades. Interesting. Range Baby today made $700. Star Baby today made $83. Penny today made $15. HFT Baby 3. One for second chance. Then we have our bots that are breaking down performance. So I say this to say is that there's just a couple of bots that I need to stop and actually review their code, and I need to get a couple of bots that's actually going to work. So one of those bots that I'm going to stop is going to be Squeeze Baby. Month to date, you can see one trade. Not really doing this thing. Not really doing this thing, fam. The pop out was supposed to work, but I guess that's not working today. Another bot that I'm thinking about stopping is going to be Afternoon Bay, because that is another afternoon bot I have to start. 15 trades, and it hasn't traded since last Wednesday. So again, very, very cautious. But again, I think just being able to roll out the bots that don't work and keep the bots that do work is going to be a lot more advantageous for us. So as y'all can see, I'm damn near halfway through the month, and we are up right now because of this big day, but I want to get this P&L a little bit higher. Right now, I'm at 47% with 330 trades, but I want to get it a little bit more better, right? So average per day is up, but again, it's this win rate we're trying to get better. So let's go back here. You should be good. I damn near talked myself into a corner there. All right, bet. Oh shit, this is what I need. My fault, sorry. All right, you should be GWAPiter. Tell me you love me. You know that it's after the market. All right, if I hit this, you close. You see how we don't get that big long list of just Nathaniel? Bet. Man, I'm not going to hold y'all. I'm good. I have a couple more things that I need to get done, but that's something that I'm going to do on my end. But nonetheless, y'all, we have a bot, ladies and gentlemen, and I'm going to be keeping up with this bot, and I'm going to see how well this bot actually performs, and to see if we can actually graduate it to live. So right now, it's going to be paper trading. We're going to see how well it performs, and I'm going to be dropping update videos. So if you like this, don't forget to hit the like and subscribe button. It is your boy Kreative. I'll be back at it again with another episode.